Hello everyone, welcome to Finance with Brothers. I'm Ajay Sharma. Today, we'll talk about one of the most exciting short-term strategies in the stock market, making profits from IPOs within days of listing. Our goal is simple, to identify IPOs that can give good returns within a week of listing, so we can book profits quickly instead of holding shares long-term. This is a short-term, high-reward game. We'll discuss how to evaluate IPOs for listing gains, how to use tools like the Chittorgarh portal and share market IPO application to check Groww market premium, SME IPO risks, and how to apply for an IPO using the Groww application. I'll also share how to time your application for maximum gain and explain the IPO timelines so you know exactly how to play this game. To start with, what is an IPO? An IPO, or initial public offering, is when a company offers its shares to the public for the first time. This allows the company to raise capital for expansion, debt repayment, or other business needs. For us, an IPO is not just about owning shares. It's about finding short-term opportunities to book profits within days of listing. The obvious next question: why not hold IPO shares long-term? Because not all IPOs perform well in the long run. But many deliver strong gains on listing day due to hype, demand, and limited supply. By applying strategically, we aim to capture those gains quickly, usually within a week of listing, and avoid long-term risks. This is a short-term, high-risk, high-reward game. It requires research, timing, and discipline. So how do we decide when to apply? We don't apply on the first day. Instead, we wait and watch to check the hype around the IPO, subscription numbers, and Groww market premium trends. This helps us confirm demand and shortlist promising IPOs. Once we have enough data, we apply on the last day of the IPO application window, or sometimes on the second day, so we can enter with better insight and increase our chances for listing day gains. To capture listing gains, you need to understand a few key terms. Issue price is the price at which shares are offered during the IPO. GMP, or Groww market premium, is the unofficial premium at which shares trade before listing. GMP shows demand and potential for listing gains, and you can check it on the Chittorgarh portal or the share market IPO application. Lot size is the minimum number of shares you must apply for. Listing price is the price at which shares start trading in the market. And allotment is the process of assigning shares after the IPO closes. For example, if the issue price is 100 rupees and GMP is 50 rupees, the unofficial price before listing is 150 rupees, meaning a potential 50% gain right on day one. The key question: how do we know if an IPO is worth applying for listing gains? We look at the GMP before listing to gauge demand. High GMP generally means strong interest. We check oversubscription numbers, promoter reputation, sector sentiment, and the reason for the IPO. All these factors together help us identify the IPOs with the highest potential for quick gains. You can check this data in the IPO prospectus, NSE or BSE websites, and on the Chittorgarh portal. Our approach changes the IPO timeline slightly. We don't rush to apply on the first day. When an IPO opens, we spend time monitoring the hype, subscription numbers, and GMP trends to better understand demand. This observation period helps us decide the best moment to enter. Based on this, we usually apply on the last day of the IPO application period, though sometimes we do it on the second day if the signals look strong. Once the IPO closes, allotment happens, and in just 2-3 days, the shares get listed on the stock exchange. That's when the real opportunity arrives. We aim to book profits on the listing day itself or within a week. This way, funds are blocked for only a short period, and we focus on a high-reward, short-term game rather than a long-term holding strategy. SME IPOs can also give big listing gains, but they're risky. They usually have higher volatility, lower liquidity, and less historical performance data. These are opportunities for high-risk traders who want big short-term gains, but careful evaluation is crucial. How to apply for an IPO and improve allotment chances. You can apply from any demat account you own. Applying from multiple demat accounts can improve your chances. On Groww, the process is simple. Open Groww. Log in and go to IPO section. Under the Invest section, select the IPO you want. Enter the number of lots and bid price within the price band. Select your bank account and confirm. To improve your allotment chances, apply for one lot only in the retail category. Apply from multiple demat accounts in your family if possible. Use different bank accounts with different demats and ensure demat accounts are linked to bank accounts and PAN. Most importantly, apply on the last day or sometimes the second day after carefully checking hype, subscription trends, and grey market premium. Investor categories matter because they impact allotment. HNI or high net worth individuals apply for large lots above 2 lakhs rupees, while retail individual investors apply for lots worth 2 lakhs rupees or less. Most retail investors follow this route. The next question: how important is GMP or grey market premium? GMP shows market sentiment before listing and helps gauge potential gains. But it's unofficial, so always combine GMP with other research. Tools like Chittorgarh and Share Market IPO app make tracking GMP easy. To wrap up, IPO listing gains are a powerful short-term strategy if approached strategically. We don't rush in on day one. Instead, we wait to observe hype, subscription trends, and GMP. Then we apply at the right time to maximize gains and exit quickly. If you found this video useful, subscribe to Finance with Brothers, hit the bell icon, and share it with others who want to learn smart investing. I'm Ajay Sharma. See you in the next video with more finance tips.